China has been caught lying about its GDP numbers. In an admission from government officials, it has been made public that growth was inflated significantly in order to produce the desired result. Finally, we have a bit of honesty in the world of lies and deceit. That's why you came here for the truth, so let me unveil that for you. So today we are going to talk about China specifically. Now, everybody knows that China has been growing year after year after year. And despite the fact that we've seen less growth over the years, we know that there has been growth. That's for sure. It has public works projects. It's got people moving from the rural areas into the cities. We've seen those trends. But how truthful are these numbers? Well, finally, we have a little bit of information which should give people a closer look at that. So let's get into it today. This is just a wonderful picture of me. Look at this, the Chinese debt problem. I want to start with this, about the GDP in general, okay? We're looking at the debt problem, and it's not just China, of course. All countries around the world are suffering from so much debt, national, on a personal level. All the cities are just heavily in debt. I mean, they're invested in these garbage pension funds and everything else that are just rotting and just waiting to implode. And then you look at their GDP numbers, their growth, but also the debt to GDP, and it is significant. It is terrible. China's debt is 250% of its current GDP, and it presents an explosive sign of collapse of the economy. Corporate debt in the economy is 165% of the GDP. China made investments into fixed assets of the economy. The state-owned enterprises did the maximum effort in this case to hold a huge chunk of the corporate debt of the nation. Essentially what happens, any country, the government will step in and start to buy things. And they may buy these toxic assets, as you saw during the financial crisis, and then look to Europe after doing a very similar thing. What is the result of this? Well, essentially what it does is it puts the burden onto the individual. No longer is the corporation going to be footing the bill, going to have to pay the price. No, it's not the way it is. It's the people as a whole. That's what you try to do. You try to take that burden and give it to the people. Of course, the people didn't screw up. The people didn't make bad decisions, bad investment decisions. They're working their 9-to-5s. They're working themselves to the bone day in, day out. They barely have any time for themselves. And yet they have to suffer more than, let's call it the 1%, but you know what I'm talking about, the elite, the corporations, whatever. They're the ones getting all the advantages, the CEO bonuses, the bailouts, TARP. They're the ones who receive the benefits from all the quantitative easing. And you, down that line, get screwed over. Okay, that's what happens. So let's look at the GDP growth now. Let's try to understand how these numbers here are calculated. More importantly, let's look at how they are shown to the public. Okay, to the absolute surprise of no one, Chinese economic growth came at an annualized growth rate of 6.7% in 2016, and just briefly, 6.7%, significantly higher than most Western nations. Okay, that's a fact. You won't see anywhere even half of that, a growth rate in the US or Canada or the UK. I mean, Canada's contracting at this time. UK, we saw something similar happening recently. And the US claims that it will grow at, a fair amount, 3 to 4%. I don't know. We'll see. But anyway, at this time, it hasn't grown at that rate. There was a moderate surprise that it was 6.8% instead. And so the media will publish that, say, even better than expectations when it's even just 0.1%. What is it, though, that they're looking for? They're trying to get in between 6.5 and 7. And they basically put those numbers right in between that target rate. But are the numbers real? I mean, we're seeing the numbers, but how real are they? Well, before I get into that, let me just show you here. this chart goes back up into 2006. General line obviously being downward. And just another thing is you have this slow sort of decline that we're seeing that's been happening over the past few years since the financial crisis, essentially. Just a slow and steady decline. Okay? It could come up, but that's the trend. Month after month after month, we are seeing that trend. And it just seems to me that the expectations globally are less growth. That's what I would say. All right, look at this. Out of the Financial Times, the Chinese province fabricated fiscal data for 4 years. Okay, this is an admission here. Fabricated for 4 years. A senior official has admitted the latest blow to the already shaky reputation of China's economic statistics. Okay, so we've seen this report. I mean, I've covered it here on the channel before, where I believe that the actual growth rate they believed was somewhere around 4% or less. But that was, independent analysis and calculations, and probably more realistic. But when you see the actual government coming out and admitting it, it's huge. It's like, okay, it's obvious. Let's just mention it. Fiscal revenues for the province were inflated by at least 20% from 2011 to 2014. And he was involved in a large-scale financial deception, good word here, at city and county levels that lasted a long time and involved many people. So this particular province that they're referring to, it could go much deeper, and I'm sure it does. But anyway, regardless, it pushes those GDP numbers right up into that middle of where they want to be. They want to be too low on the expectations. They don't want to be too high to set off any alarms, but they just want to lie just a little bit, just enough to make it look okay. Now, what's important to note is that the falsification led to additional taxes of $146 per person in recent years. People getting screwed over. That's the end result. And that is, of course, the intention all along. Let's look at this. China's annual growth, GDP growth that is, and you can see that we're going back significant here, right across the line, heading back, if you can't see that for yourself, 1990, okay? The 1990 time frame anyway. I mean, it's ridiculous to go back this far in the data and not set off any alarms. And then you will see, since the financial crisis, downward. Okay, that's what I wanted to show you. Let's move on. Total social financing, again, another statistic going back a few years, but this is something that moves up and down, up and down. So I'm not going to really spend any time on that. China's GDP year over year, again, slow and steady decline. I can't move that at all. I tried to move the chart for you, but anyway, you can see the slow and steady decline. Industrial production, same thing. Look at the retail sales, shouldn't surprise anybody. It's globally. And you look at the fixed asset right here, down as well. Okay, everything downtrend, everything moving on a downtrend since the financial crisis. This is in fact the financial crisis part 2. Okay, moving on. Last one. China debt to GDP. I mean, look at this. It should be setting off alarm bells. In all countries, we're seeing the same thing. Debt to GDP rising very, very dramatically. Why? Because they do not want to solve the problem. That is it. They do not want to solve it. They want to print money. They want to create bailout schemes, bail-in schemes, and everything else. And ultimately, the burden just gets worse and worse, and the bubble inflates further and further. And eventually, you listen very closely, and you will hear the pop. If you found this video informative, please give me a thumbs up. And if you prefer to stare at this, perhaps you have this, a poster up on your bedroom wall, then you can give me a thumbs down instead. If you found the video informative, I know you will find my book, The Money GPS, even more informative. You can actually look through the book. If you go over to Amazon, they have a look inside feature that will allow you to flip through the pages of the book and see if you like it.